How's everybody doing? Today I just wanted to simply cover why TJRS Liquidity Sweep breakage structure setup. It works whatever for him. But a lot of the times it can simply be luck, right? Just understanding that he's, entering shorts and, in a premium and just smaller things that, align with what we do. But at the same time, most of the time it's him catching retracements. And obviously myself, I'm not perfect. I don't catch, a daily range every single day. Sometimes I, end up catching retracements. But, right, using your narrative in your high time frame, just thinking, right, with everything that I try and preach, we're going to, understand why, his thinking of identifying, certain key levels, why they can be wrong, where his targets can be wrong, right? Because I know, this is a 2.6 hour trade, but, right, if we look at the chart, it makes sense that we would think all this low resistance liquidity gets taken out. If we do have an SMT, we could take profit, but I don't know. I don't see him looking a lot. It's been a minute since I've actually looked, but he was one of the people, everybody watched the summer boot camp that was like, a year or two ago, right? So coming in also, you can see that we have a 5-minute fair value gap, a higher time frame fair value gap, and a 15-minute order block that we haven't delivered from, right? It's unmitigated. It's resting above. We have an accumulation, so it would make sense that we sweep, right? If you're thinking about it in his mentality. We're going to go over some notes as well. Simply looking at this chart, I'm going to highlight the things that, not everything, but I'm going to highlight some things that I see, right, for why, this doesn't make sense. Obviously, we got our where, our when, why, or excuse me, our where, why, and our where, when, and why. Right, so this low is going to be protected from an SMT. There's no reason to sweep it. High time frame orders have been paired. A breaker has formed, so there's no reason to retrace lower to a high time frame order block. We also have a high time frame power of 3. Obviously, we have a power of 3 in every candle. Lower time frame, right, 15, right, but I'm not going to, show you, check your own charts, right? Efficient price delivery aligns all of our confluences, leading to no analysis paralysis. I've seen a lot of comments and people asking me as well, how can you line all of these up? And if they don't line up, simply just wait, don't take a trade, right? There's plenty of days during the week that we can just, wait for, rather than trying to force a trade, even 3 days out of the week. If you take 2, trading the way that we do, you could win 2 a week, or either be 1-1 and still be majorly in profit. I'm going to zoom out to the higher time frame as well and show you where we are delivering from. We also see a higher time frame SMT with the breaker at the lows. You can check your own chart. I'm on NQ, so it aligns with ES. We have a order block resting here. Whatever you want to see, breaker, right? We have the equal highs and blah, 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 right? Whatever you call it and see it as, you can see where and why we're delivering from. Also, you can see that this, after we confirm closure above this 4-hour candle, confirms our buy model higher. We then have an SMT, right, that then we retrace from, but nonetheless, we do finish the buy model here, and with this accumulation level acting as our original accumulation. Even though I didn't expect, right, this high to get broken, taking short in here, I wanted us to continue lower, but I could understand why price did and continue where it did. If you don't know already, here's a simple overview of the liquidity sweep breaker structure setup looked for by TJR. I'm not gonna name out everything because it's probably known by now to everybody, right? But It's very similar to how turtle soup traders trade, as identifying key levels, waiting for a sweep, a CSID conversation, good lord, confirmation. In his terms, it can be a breaker structure, whatever you want it to be, right? With a simple entry and stop loss after the breaker structure is confirmed, and a stop loss beyond the swing high and or low that was swept like we saw in the previous setup. Target levels would either be below swing lows. Like I said, I haven't watched him in forever, so I don't know if he takes profits within the range, but for us, we don't need to. And also catching high RR trades, right? We know when it's protected and if we need to take profits before the low is broken. As well, this setup aims to take advantage of the manipulation of stop loss orders. A lot similar to how we trade, right? If you didn't pick that up. This is why it doesn't work, right? I have 10 reasons listed below. Starting off with draw on liquidity. It's very easy to misidentify liquidity zones and lead to false signals or, right, taking a bad trade. Simple explanation is liquidity zones are just right where there's a quick cluster of stop orders that are going to be ran and price has a quick draw to. Number 2 is going to be the smart money divergence. Smart money technique, tool, whatever you want to call it. Doesn't really bother me. Right, it involves comparing related instruments or symbols, right, indices, whatever you want to call it. There's one word I'm missing. I can't think of it though. Right, but if you misinterpret one of these divergences by not knowing the different types and understanding why, when, and where they happen, right, a particular move is not going to materialize. Like we saw in the previous trade, the low was protected, so there was no need to draw into it to then either run higher or keep running lower. SMTs don't move the market, but they do add a very strong confluence when used correctly. Very simply, you can be in the wrong premium and discount of a higher time frame within a lower time frame, right? Simply being, a 1 hour inside of a daily or weekly, and then even lower like we saw into the 5-minute. Incorrectly assessing these zones can lead to crucial bad positions, right? If you simply try and sell when we're in a lower time frame discount, it's going to lead to your stop loss getting blown very quickly. Coming into number 4, it's going to lead into our time, right? This can simply be summed up to one model, one session. With me, I trade the New York AM session because I know what the draws are usually going to be, and if we need to expand past them, or retrace, right, to the London low, Asia low, depending, right, whether our market news is in the morning or do we need to wait till, right, news or the 4-hour close with the 10 a.m. candle. Waiting for an open high low close, right? Lots of other things going into that as well. It offers different levels of liquidity and volatility. You could simply try and trade the Asian or London, right, but like I said, I only trade the New York AM for a certain number of reasons. Entering trades, like we said, during the Asia period can result in poor executions and just, extra waiting to get stopped. Right. Also, ignoring significant news events can lead to unexpected market moves and just, easily getting wicked out when not anticipating it. High time frame order flow and misreading order flow can, like we said, same thing with buying in a premium or selling in a discount. It's going to lead to, right, your stop loss getting blown very quickly. And it involves, right, looking where the actual institutional order flows, where the actual, good lord, where the actual institutional orders are sitting and resting when we run them, right, and when there's no need to retrace past them. Like we saw after the high time frame SMT with the low time frame SMT inside of it, and the CSID created, there was no reason to run lower because the retrace was more than enough for our weekly and our monthly analysis. Another thing I never hear him talk about are simple market maker buy or sell models. right? Failing to notice when we break a significant higher low can simply lead in, just having a bad markets analysis high time frame and not even being close to understanding why and what happens. Like we see here, they often create false breakouts to induce retail traders into the wrong side of the market. This is when we execute trades, and this is when, right, a good liquidity sweep break a structure trader could, but if they don't understand why and when and where, it's going to be a lot harder. If you can recognize these traps, right, or excuse me, if you're not, able to recognize these traps, right, you're going to enter a position and, right, have them quickly turn against you. Like we see a lot of the times and talk about, whether a high is wick through or not closed above, whether it creates a breaker, or if it's a real turtle soup. Order flow tells you that, and right, whether if you don't want a turtle soup and wait for a little bit of reaction, you can just wait for an internal retrace turtle soup. It's right just as good having, a little bit worse of an RR because you're not usually be able to, right, get it below, right, a super, obviously you have it below the internal low, but right, if we retrace right into like the wick of the rejection block and you have it, at the low of the body or something like that. um and obviously, right, not all the times is, something like that gonna happen, but it just depends, right, what type of price action and, movement we're looking at, whether if it's a high probability or low probability day as well. Misapplying the power of three concept is seen a lot. It just refers to the simple accumulation, manipulation, and distribution, and it's hard to see it high time frame, right, as well as inside with the lower time frame, and aligning all time frames. This is where we get a lot of analysis paralysis from, and it just, kind of builds up a lot of noise when it's really, not that much noise, and it just takes a little bit of getting used to understand and see. I guess I may have seen sometimes him talking about a daily profile, but I don't even remember. Right? Incorrectly analyzing a daily profile. We saw, um, shout out to Crunk, like he explained to us in the Discord. When Monday's usually a low of week, right, we're going to have Friday expand, especially with NFP. There was no reason to just keep expanding. However, even me, right, I wanted at least a retrace for some type of, not necessarily a TJIF, but just, I thought we would get, not a good retrace, but I thought we would at least, close somewhere a little bit to the data low, but right, we'll use that liquidity for a different time. And it didn't, right, destroy me or whatnot. We just ended the day, right, a little bit green, and that's good enough for me, especially being at all-time highs. Just not the best personally at trading them, because even, I go back to my retail days, so I'm just like, oh, I want to short so bad, and obviously we're in, the, the most premium we can get, but there's going to be, right, certain days where we just understand that it's going to keep expanding. And going along with, like we said, with our weekly profiles, whether if it's a Thursday reversal or a Tuesday low a week, Monday low a week, like we've been seeing a lot here, or even a Monday high a week. Failing to recognize these can just lead to, even if you have a bad Monday or Tuesday, right, you can quickly hop on board and understand, right, what you did wrong, where you went wrong, and why you went wrong, and, be able to catch yourself if you did take bad trades or just were on the wrong side mentally wise. You can come in Wednesday, Thursday, and Friday with usually, right, understanding if you have a high probability Wednesday expansion day, and come into that day confident and be able to either make back your losses or, you know, uh, profit on, the thinking you had and the understanding that you have on it. Excuse me. I've been talking so much, my voice is just scratchy and killing me. Another thing I see a lot, and even I used to do, is pattern trading without a narrative. Right? Simply pattern trading and waiting for either a 1 minute, like 1 minute's crazy, but a 1 minute, 5 minute, or even a 15 minute, right? Trading these solely with a pattern is, it's, I have no words for it, but it's, right, it's just simply going to lead to poor trading, bad decisions. They're misleading, They don't have any dynamic or any, understanding of what's going on. It's just a pattern. It's essentially gambling, like, obviously I wrote here. Small conclusion, right? While his strategy does offer a somewhat structured approach, right, it's not without, its downfalls and, right, misidentifying liquidity zones, not understanding why and when and where the market moves, like we said, misinterpreting smart money movements and uncorrelated markets, incorrect analysis of our discounts and premiums, poor timing, misreading order flow, falling into traps, but as well as, right, just either getting manipulated, used as liquidity, and or not spotting a higher time frame market model as well. Misapplying the power of three concept is often seen. Jesus, big stutter. I'm gonna just leave it in. It's whatever. But right, coming into the end of it, if you're still here, right, you can, I'll let you see the stutter because that's terrible. But you gotta simply understand a day-to-day understanding and really understand all the concepts, even past these in the old videos as well. And, ones that I'll try and remake and, explain them better than I did. Right, you can keep improving day to day. Avoid small mistakes, get 1% each day, get 1% better, and improve your trading performance. Hope everybody learned, at least one thing from this video and, what you can change and how you can get a little bit better, right? It's not strategy hopping. It's, it's all the same concepts packed into, right, just a weird formed net on the internet. And it's really simple when it comes to it. Y'all have a good one, and I'll see y'all later.